Hi, this is Steve Nison. Welcome to our next edition of Highlights, the free educational video resource for the candlecharts.com family. And today we're going to be looking at one of my trading principles. These are core trading principles. They're the bedrock to, in my opinion, successful trading, and they work time and time again. And one of my trading principles, I have about 12 or 14 of them, is, and we may have seen this before in a prior video, about the importance of combining candlesticks with candlesticks with Western indicators. But one of the things that I also want to address with this is, although we focus on the best of what I call the East and the West, also if you have a group of candlestick signals confirming the same support resistance area, we've greatly increased the probability of the trade working. So we're going to focus in this session on what I call a confluence of candles. In other words, groupings of more than one candlestick signals reinforcing one another, and that greatly enhances the likelihood of the trade working out. So most of you who are familiar with the basics of candlestick charts should know about the shooting star, very long upper shadow, small real body at the bottom end of the trading range. And one of the great things we could do with the candlestick signals is use them as potential support and resistance. So the high of the shooting star, the top of the upper shadow, and just to refresh your memory, the upper shadow should be at least twice the height of the real body. The high of the upper shadow should be resistance. So with that in mind, we have a shooting star here on the left side of the slide, and it's okay to have a little bit of a lower shadow, and the real body can be black or white with the shooting star. So we can see by the top horizontal red line that becomes potential resistance. Now keep in mind that because the candlestick lines are constructed with the same data as the bar chart, open, high, low, and close, that means all classic bar charting techniques, moving averages, something as basic as a trend line like this, can be used on a candlestick chart. In fact, I strongly recommend you add Western technical charting techniques. And so, would this be a resistance area on the bar chart? Sure. Is it a resistance area on the candlestick chart? Most certainly. And what we'll do from time to time, for those who get our daily market commentary called Illuminations, and by the way, for those who don't, you certainly I invite you to sign up to a two-week free trial. Just come to my website at www.candlecharts.com to sign up for that. But for those who get Illuminations, you know sometimes we have support and resistance zones. So this would be a potential resistance zone, these two pivot highs here. Now, the question is the market at resistance with this white real body over here? And of course, we're right near a resistance area, and the answer is yes. But the second question, which is probably just as important, are there any reversal signals with the candlesticks? And at this point, the answer is no. So remember, with a bar chart, resistance is resistance is resistance. With a candlestick chart, we have an extra dimension of analysis because we can gauge the market's momentum. And so here the market's at resistance, but there's really no bearish momentum yet. Yes, a bit of an upper shadow here, but nothing to really get me nervous. Now we go only one day later, and we could see how in one day the whole tone of the market had changed, because now the market's at resistance, and we also have a potential reversal signal, the doji. Remember, with the doji, with the opening and closing at the same level or nearly the same level, the Japanese will say the market's tired. So this is where we could think about pulling the trigger on the short side. We have candlestick signal, doji, confirming a resistance area from another candlestick signal, a confluence of candles. Now you notice also in the title of the slide it says targets. And one of the things that I've been focusing on in my more recent education is the idea of people helping you in our candlecharts.com family avoiding misuses of candles. And you can't believe the bad information I see out there. I've seen people lose thousands of dollars on really misunderstanding the candlesticks. You know, there's other material out there, but I did an interview this week, and interestingly, the interviewer called me the go-to guy for candlesticks, which I thought was pretty nice. But I spent years and years going over the translations that somebody did for me. I have all the original source material, the Japanese material, and everything I talk about in sessions like this and all my longer-term sessions have been corroborated by at least 2 or 3 separate Japanese sources, whether it's a Japanese trader or 2 or 3 Japanese books. And the reason I mention that is because we're going to go over a candle misuse alert now. Now, many people don't realize that candlesticks, let me go back here, as great as candlesticks are as calling reversals, and this has a high probability of reversing because we have the doji confirming resistance area. Candlesticks do not give price targets, and that is a misuse. People will see a group of candlestick signals, say 5 doji or 5 shooting stars, and they'll think, oh my goodness, we have a group of candlestick signals and that means the market's going to zero. That is nonsense. If you have a group of candlestick signals confirming one another, we've increased the likelihood of the market turning. It doesn't give us a sense of how far the market's going to move. And with that, I had this cartoon made up about the candles. Okay, you can tell, I can't tell you how far it is. In other words, we can't tell how far the market's going to move, but the candles will give you the way. It'll tell you if the market's going to be turning or not. So let's get back to this slide here. So we do have a resistance area set with the doji, correct? And now we have a potential turning signal. Then the next question you ask, what are some potential targets? Now, a target to me, a price target to me may be very different than a target to you. But if I see something like this, okay, this would be our first support area. And our, for example, in illuminations, this would be S1. We have zones of support and resistance. This would be S1. And actually, I probably should have made this a little tighter. I probably would have made a zone here. From the low here to the low here would actually be a support zone over here. And S2 would be down here at the bullish engulfing pattern. For those who don't remember what a bullish engulfing pattern is, it's a white candle wrapped around a black candle. So this would be our conservative target, and this would be our more liberal target. Now notice the target has nothing to do with candlesticks. The candlesticks will give us a reversal signal, but the targets are based on either support or resistance. You may like moving averages or whatever you're looking at. And this is what unfolded after. So it was a great short sale, and it actually hit our second target, our second support area. Now this is some candlestick signals confirming resistance. Let me show you something really neat, how if you understood the candles, you would have gotten in or potentially gotten in at the lows of the recent move before the tremendous rally that we had in the equity markets. Okay, the hammer, again, a refresher for those who are familiar with this. Hammer is a potential bottom reversal signal, long lower shadow, small real body at the top end of the trading range. The real body can be black or white. The Japanese say the market's hammering out about a bottom, potentially a bottom. And another bottom reversal signal, and you'll see where I'm coming from regarding these two patterns in a minute or two. We have a bullish engulfing pattern, a white real body wrapping around a black real body. By the way, the real body does not have to wrap around the shadows. So we're visually seeing the bulls are wresting control of the market from the bears. And this was through yesterday in the, or depending on when you get this, a couple of days ago. And we did have a little bit of a pullback, a little bearish engulfing pattern, the black candle right wrapping on the white candle. But the reason I have in the title here, if I had only seen this, look what we had in March. Classic bullish engulfing pattern, white wrapping around the black. And then right near that same level, a classic hammer. And this is what I mean by a confluence of candles. Okay, the Japanese say if heaven drops a fig, open your mouth. This was one of those times. Wouldn't you have loved to see this? And, this is what the candlesticks are all about, giving us those potential reversal signals. In fact, somebody who attended one of my seminars sent me an email, and he said, thanks for the great information. Now I'm able to get into the market before the market does its thing. And this is just a perfect example of that.